Hi guys, so today I will walk you through every single trade which I took in the month of January 2026, and I will show you the exact way how I was able to make more than $20,000 in 1 month as an 18 years old trader. So the first trade which I took was on gold on 7th January, because I don't trade first week of January as it is holidays. I spend time with my family and I believe that market conditions are not the best at that time. So we're here on gold. Let's start our analysis from high time frame. So here we can see a weekly chart. We can see that we are clearly in a bullish price lag, but unfortunately we didn't get here weekly fair value gap mitigation, but that's okay. I drop on daily time frame, and overall my bias is bullish. As we can see, we also have inversed this bearish daily fair value gap, which I like, and we have this bullish daily fair value gap as our next drawn liquidity, but also a reaction point to go higher. So as I come to the market at 2 o'clock in New York, yeah, it's right now, yes, I can see that on hourly time frame we're bullish. We were bullish, but then we have shifted bearish. On H4 time frame, we can see that we had one bullish H4 fair value gap, which we have inversed and created a new one. And this right here, so yeah, this is our daily fair value gap. As I said already on daily time frame, this daily fair value gap is very important. This is what you have to understand. This, if we mitigate this daily fair value gap, then I expect for price to go higher and to collect liquidity stacked about that highs. But also if I see clear, yes, and we are in bullish markets, and I look for primarily for longs, but I can also short it to this daily fair value gap, because it is also an obvious drawn liquidity, and if my middle time frame, so 4-hour time frame and 1-hour time frame aligns, I can take shorts, no worries. So yes, on 4-hour we inverse this daily 4-hour fair value gap and move lower. So here I see a weak slow price and some liquidity as lows. On H1 we have shifted bearish, so I was looking just for possible shorts to daily fair value gap, which is right here, as you can see. So yes, let's go ahead to London session. So yes, here London session starts, and I take my entries from H1 fair value gaps, sometimes also from H4 fair value gaps if I want to. So yeah, in this scenario, this is also very important. We have two fair value gaps here, two HFVGs. This was already partially mitigated, so I don't really care about it. And we have like immediate structure between them, so I care only about those two fair value gaps here. And for me to take short entry from those two fair value gaps, I need to see discount area to be mitigated. So 50% of the price, like yeah, my FIB. So we can see that it is right here. I'll cancel it, remove it here. So when this level gets mitigated, then I drop on lower time frame and search for my entries, which is on 5 minutes. So yeah, let's skip a bit forward. So yeah, as you can see, now the equilibrium of two fair value gaps has been mitigated. So now I drop to 5 minutes time frame and I look for market structure shift. In this scenario, I can also use IFVGs, so inversions, but this is more aggressive style. In this scenario, I would prefer to wait for market structure shift, MSS. So yes, we can see that our current swing low is here. Let's skip it a bit. Now it is here because we had a break above the high, and actually we got a we filled those fair value gaps fully, which I like. It's also good confidence for us because price has absorbed more liquidity to go lower. Because here you can see a lot of stacked sell orders. That is actually what a fair value gap is. Then I wait for this low to get taken. We can see a nice rejection from the level. Price ranges. Yes, and here we get a close below our swing low. This is my entry confirmation. And sometimes I place my order on market, so I just buy it directly here. But in this scenario, I just placed limit order with my stop loss about that high, swing high, because stop loss is indeed a bit big already. So yeah, on gold it is pretty solid. So I didn't want to have my stop loss like that. That would be so big, and I want to target just daily fair value gap. So yeah, it just gives me 2.5 R. It's not ideal, I would say. So I went with limit order. I always take partial take profits at 3R in this scenario as well, and it helped me in this scenario actually. So as we can see, I can market this here, and my full take profit is going to be on daily fair value gap, my main target. So let's see how the trade plays out. We get an immediate tag into our trade, into M5 fair value gap. Price reacts, gets a reaction, then consolidates for a bit, sweeps lows, and then we get this sell off. At this moment in time, so yeah, we got close above our swing low, but I still leave my stop loss on that high, full stop loss if it hits, because my confirmation for break-even I haven't seen it yet, because my entry confirmation should see a break of structure below, in this scenario, below my entry point. So if price does something like this and then takes the low, if it doesn't come back to here and just, for example, like that, I will go break even, because it is a new break of structure below my entry. But we haven't gotten it yet. We also have news, unemployment change, and ICM. Here, ADP unemployment change is not so important, but still I would like to have my stop loss at least at break even at that moment in time. And here, bear in mind that here is my 3R. So yeah, let's see how this trade plays out. Again, yes, as you can see, it's very tiny and shallow, but still we got a candle which didn't take out this week, was a bullish, and then an aggressive sell candle with a break of structure below it. So from here, I'm break even. I'm just in profit, and just scenarios whether it hit my take profit or break even, and I don't. So it's basically a risk-free trade. Let's look again. Yeah, price comes down, and yeah, so as you can see, immediately my take profit one got hit, and then it shallowly misses my take profit at daily fair value gap, and then news comes out, which wasn't that big of a deal. But this is also something very important which I want you guys to understand. In this specific scenario, so yeah, news didn't do that much, and anyway, I still have so my first take profit was hit, but my main target not, and I have my stop loss at break even. So the worst case scenario, I just get 3R with half of the take profit, and I just get break even. That's all. Then price consolidates a bit, and then it hits my full take profit, which is at day of fair value gap. And this exact trade is very important, guys. I want you to understand that, as when you see your first take profit hit and then price shallowly misses your take profit level and starts reversing, but it hasn't hit your take profit yet, or your main target, excuse me, and starts reversing, you think, when price is here, you think, yeah, it's all gone, I should close my position, it will never hit my full take profit, so I just have to pray for the best and close my position here, and because I think that it will probably hit my stop loss. But actually, this is why it's very important to have your emotions under your control, because I did not close my trade here, and I waited patiently, and then my full take profit got hit. So it shows you how emotional stability is very important in trading. So yeah, this trade was nice trade, 1 to 4R, and yeah, that's the first trade of the month. Nice, good start of the year. So guys, let's move to the next trade, which was on January 14th. This trade I took on EURUSD, and this was a losing trade, but I placed it with really low risk, and I'll explain you now why. So, coming to the EURUSD in New York session, we can see that price is bearish. You can see it here, swing low is here, and actually, as you can see here, we had a bearish HFG, which was mitigated, but actually we have inversed it already. I would argue that it is inversed, but usually I won't take those type of trades. And we also don't have here H4 fair value gap, which would be a better confluence, but we don't get it here. But the context behind this trade was so powerful and so nice that I couldn't just take it. I just applied my own discretion and took the risk, and yes, paid the price. So, coming to EURUSD, H1 is bearish. What I really like, I want just guys you to understand my how I see the price, and because price doesn't behave the same way every day. Every day it's different, but your brain, your eyes they will recognize some patterns even without you thinking. And I want you guys to have the same understanding of price as I do. So I will explain now what I see here. H1 is bearish. We have a lot of sell side liquidity, as you can see. Open of New York low, other lows, London low, Asian low, and also an external swing low. A bunch of sell side liquidity also here. But also not only that, if we come to weekly time frame, we can see that right here it is pretty small, but right here we have weekly fair value gap, which is huge draw on liquidity, which I want to target. And so yes, I'm definitely looking for shorts. Unfortunately, we don't have here H4 fair value gap, but that's okay. But also I looked on DXY, which is basically a dollar index, and it is a correlation between them. So basically, if EURUSD goes higher, DXY goes lower, basically. So in that scenario, if I am looking for shorts on EURUSD, I want to see the same picture on DXY. So on DXY, we see that we are also bullish on H4 time frame. And what I really liked on DXY, we have indeed bullish H4 fair value gap, which got even respected and mitigated. H1 is also bullish, and we have here as well a lot of stacked highs. Those equal highs, London highs, a lot of liquidity. You can clearly see yourself. And also on weekly time frame, we have here as well a weekly fair value gap, but a bearish one, as an EURUSD bullish one. So my confluences are really nice. But as I already said, the H1 fair value gap got disrespected, so inversed, and I usually don't look for trades after that. But here I wanted to capitalize on that move because I was so certain about that. We had news at, we can see it was producer price index at 8:30 New York time, and I wanted to wait for that, and didn't do much. And then on 15 minutes I see that we get this inversion, this M15 inversion, and right after that, on that candle, I enter short right here with my stop loss just above that high, and I want to target this all sell side liquidity, but my main target is where is it? Is my bullish daily fair value gap, which is 2.87 R, which is okay. Because I really like this trade. So yeah, after 15 minutes inversion, I take this trade. Just look on that. Swing low, Asian low, London low. And then, this is also very important, as you see, price goes like that, excuse me, higher, then comes, mitigates everything, then higher, mitigates everything, higher, mitigates everything, higher, mitigates everything, higher, mitigates everything, inversion as I enter this trade. You can see that price all the time respected the lows, low, as you can see here, low respected, lower spread, but also Asian was respected here as well, respect here is an inversion. So buy side liquidity was taken and gets taken every time with every new price leg, but sell side doesn't. And on every move down here, as you can see, here went higher, then mitigated the whole demand. There is no bullish fair value gap that is unmitigated. Then the same thing here, the same here, the same here, the same here. So I see from my experience, what I've seen, that when this happens, we take some buy side liquidity, we tap into supply zone, and then price just melts down very, very quickly because it doesn't have any opposing liquidity, because there is no bullish fair value gaps here. They were already mitigated, so it just melts like that. This is my experience. I just want to share it with you. So yeah, let's see how this trade plays out. As you can see, yes, price doesn't behave really nicely. Goes to my stop loss. Yes, here I got a stop loss, so not big of a deal because this trade has had a really good potential and really good context behind it, so I took the risk, and I still risked much lower, much less than I would usually risk on this setup, because it is not my plan actually. But then, as you can see, the London, we swept again this New York high, and then price, let me like this, and then price just melts as I said. And we can go to hourly time frame. Just doesn't even tag our entry, and goes lower and just melts aggressively, taking all of that sell side liquidity, weekly fair value gap, all those lows. So yeah, actually I was correct in my bias and I was able to place a trade, but unfortunately this trade didn't play out. And it doesn't bother me at all because I know that it was a good setup to risk my money on, so it doesn't matter. So yeah, the third trade was taken as well on EURUSD on 19th of January. Actually, I made a full trade recap on our Instagram. If you haven't seen it, go to our Instagram and to see everything first. So Here's a picture on weekly fair value gap. So here is our higher time frame. It is lagging a bit, but actually this weekly fair value gap was holding, and it held it. So I expect higher prices from this fair value gap. So basically from here up at least to this weekly fair value gap, which is also again drawn liquidity. On daily time frame, we are indeed in a bearish daily fair value gap, but I understand the context. On DXY we have the same picture, and I would choose to trade from weekly fair value gap rather than daily fair value gap any day of the week, because I understand that as higher time frame is, the better, the higher the chances are that it will get respected. So 4 hour time frame gets me even more context, because I see this nice liquidation. We didn't close actually below it. You can see that this candle opens here. Really nice inversion here, internal shift. So, and actually we get as well a fresh bullish H4 fair value gap, which I really like. On hourly time frame, we can see that the price has shifted bullish, and then this was our H4 fair value gap and Asian low as well, which was taken out, which I like even better because we have taken some sell side liquidity. And then, as always, nothing changes. I drop on M5, M15. I see that we had here, after the sweep of Asian low, reversal, inversion here. M15 as well. I like it, M15 even more. So yeah, I just place my order here, stops here, and I just target my regular 3R. For all of that liquidity. You can see highs, New York high, Asian high, also that highs, a lot of liquidity. And also, but the most important is weekly fair value gap here, which price is going to. And yes, just market order after this inversion on M15. Let's look how the trade plays out. Comes to M15 fair value gap, respected, goes higher. I didn't go break even at this point in time. Yeah, price goes nicely higher. Yes, price is a bit slow, it is true. And then it does hit take profit just the next day. I wake up and I see already take profit. Very simple trade, really nice context behind it, and that's all. Just high time frame understanding, H4, H1 structure, and lower time frame confirmation. That's all you need. No emotions, nothing else. Nice 3R. So yes, and the last trade I took again on EURUSD. It was on 23rd of January in London session. Again, as always, we're checking the higher time frame. Bullish overall. The move is coming from this bullish weekly fair value gap. Yes, we are actually in bearish fair value gap as well, but the overall context show me that I want to long because middle time frame has a strong bias. So yes, on daily time frame, price has shifted bullish pretty aggressively. We had this daily fair value gap mitigation, expansion, and I expect also what you have to understand. Here we had daily fair value gap mitigation, then close above the previous daily candle. So I expect these highs to be taken. This is very simple, I should say. On H4, we see the exact picture. swing structure, external structure has shifted bullish, which I really like, really aggressively. Then price had pulled back and collected some liquidity, respected demand, went higher, get this like internal shift. And then I'm looking for longs, because also we have some nice equal highs. We have news, but I wouldn't say that it is very important news. So yeah, in London session, we get H4 for elegant mitigation, Asian sweep, and then I just drop to 15 minutes time frame, 5 minutes time frame, and I look for entry on 15 minutes time frame. I'll skip it a bit, but on 15 minutes time frame, we can see this small bearish M15 Fairvalue gap, which got really nice displacement, inversion I should say, with a lot of volume. And then just after that, because it was pretty big price lag and I didn't want to enter right away, so I just dropped on 5 minutes time frame. I used my Fibonacci tool to identify the discounted area, which is here. So basically just 50% of the fair value gaps, equilibrium. We have already used it once. And just entry on here. Yes. With my stop loss and swing low. And my take profit, as usual, on 3R. So first take profit is 3R. And my second full take profit will be at those highs. Because if you ask me why, it was just a really simple market structure. You can see price is in a bullish trend. We go higher, we'll pull back, we collect some demand, we go higher, we pull back into demand, and then we continue higher. Simple as that. And then I placed again my order with limit order in London session. Then I get a tag here. Price was a bit slow. Let's do it on 15 minutes so I can show it faster. Then let's play the price. Comes back again, but demand is taken over. And then again, first take profit hit. Again, as in first trade, guys, you remember, first take profit was hit, second not. Then price starts to pull back. You may think that, oh yes, so my breaking is going to hit, but no, you trust your trade, you trust the process, and just go to something else, switch your brain off, because what happened next? Your full take profit hits. And guys, this was till now my last trade of the month, and in total this month made me over $20,000, and I'm just 18 years old, and I just wanted to show you how that it is possible, that I'm not different to you. And basically really just, it is crazy, but you can make a lot of money. You can make tens of thousands of dollars, hundreds of thousands of dollars, just sitting on your desk and enjoying your life. You don't need to be working every day. Look guys, I just took how many? 4 trades this month, and I made $20,000. It's crazy, guys. So just please follow your rules, get more experienced, and wish you good luck.